Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. Today's Wednesday. It's March 15th. Don't ask me where the month has gone. Don't ask me where the year has gone. Don't even ask me where the decade's gone. It's all just one big blurb. Today, though, is the 15th of the month. And we got to analyze the markets because there's some shifts going on in Europe right now. And as you can see here, the Dow Jones right now is about down 538 points. And I was trying to find out the reason for that. It's actually not USA. It's actually Europe. And I'll get into why it's going on. I'll show you exactly what it is. But as we mind these numbers and as we see these numbers, I want you to know that today, in just a little bit, in about 33 minutes, we're going to have the PPI report and the retail sales report. So if the reports are not that bad, and I'm not expecting them to be that bad, I'm actually expecting the market to rally a bit. So I don't think, unless this route holds, I don't think we're going to see this type of downside today. I think this is going to recover. I think this is too much. But let me first explain to you what it is that's going on so you understand exactly where we stand. And for that, I have to get into the news segment. Now, before I really get into the nitty-gritty, if you like this channel, like us on YouTube. It's the Wealth Press YouTube channel. I post my videos there every morning around 8 o'clock, 8:30, about an hour before the market opens to give you some time to digest them. And subscribe to our channel, like them, and most importantly, comment. I like to see your comments, the good, the bad, and the ugly. I'll respond to every comment. I don't care how good or bad it is, as long as it's nothing nasty. Send me something nasty via email. Just kidding. So let's begin. U.S. inflation data met expectations. Today, in just a little bit, we've got PPI and retail sales data. I'm really curious to see how retail sales data is doing. Now, Wall Street's main indexes really rallied. Buyers came into the market, led by communication, technology, and financial stocks. Now, the financial sector clawed back some of its losses in wake of a collapse of Silicon Valley Bank and Signature Bank. Now, Uber rose 5%. DoorDash climbed more than 5% after California said that they can continue to treat their workers as independent contractors. That's really, really big for those companies that rely on manpower or women power. Now, here's the big stuff. In addition, Meta closed up over 7% after they announced another job cut. Meanwhile, tech stocks are rallying, but Labor Department yesterday showed that consumer prices gained 0.4% for the month. Not really that important. On an annual basis, this is really important. They slowed to 6% from February 6.4, in line with expectations. For the first time, the number was actually lower and they met expectations. So they came in exactly where they were supposed to be, the core CPI. And that's one of the reasons why I think the market rallied. After the release of the CPI, U.S. futures have priced in an 81.9% odds of a 0.25 basis point rate hike and only 18% that no rate hike will happen. So I guess 0.50 is completely off the table. I'm pretty confident that they're going to do 0.25. If they don't do anything, the market's going to rally because the market's predicting 0.25 with an 81% certainty right now. All eyes are on the PPI that's coming out in not a couple hours, but actually very, very soon. And actually, let me show you what numbers I'm looking at so you could see exactly what I'm at. I want to see the core, ex food and energy. Notice 5.4, they're only expecting 5.2. I think we're going to get this number. And I think the market's going to really like this number and it's going to rally off this number. It'll be interesting to see what happens today. Very, very interesting to see what happens today. Let's go back to the futures discussion. Now, investors are going to focus on the core retail sales data. That's coming out too. I don't think retail sales data is going to have as much of a 1-2 punch after the PPI and the CPI came out, but that's where we're at. U.S. core PPI data, that's really what I want to see. And I don't care about month over month. Year over year, 5.2% compared to 5.4. So it's actually expected to be lower, and that's priced into the market, and that should give us a little bit of support. Now, for anybody that wants to know why the stock market is down so much today, let me explain to you why. Credit Suisse Group tumbled over 20% after the bank's largest investor said it would not provide the Swiss bank with more financial assistance, sparking a fresh sell-off in bank stocks around the world. That's really, really what happened. So we got to watch Credit Suisse Group very, very carefully. But the rout started in Europe. It didn't start in the US. And typically when routes start in Europe, if the market doesn't respond too much in the morning, we tend to get a bounce. Now, China's composite closed higher after data indicated that economic recovery in the country will or is gaining steam. This is really important for U.S. So China is starting to stabilize, or in the beginning stage of stabilizing. The Bank of Japan's, the Bank of China, People's Bank of China said, I confuse Bank of Japan and People's Bank of China all the time, that government would step up financial support for micro and small companies. That's really great. And Japan's keeping their head in the sand for now, which is a smart decision. They want China and U.S. to do the heavy lifting. They closed slightly higher after pairing early gains led by bank and financial stocks. Minutes showed members reiterated ultra low rates. They're going to keep rates low. They want to bring as much money out of Japan into other countries, let it work, which is very, very interesting. But it does tend to work if you're not the biggest two countries in the world. Keep your eye on Smart Sheets. Keep your eye on Charles Schwab. And keep your eye on Freshpet today. Not really a big company here, but they did announce a $350 million convertible senior note to qualified institutional buyers. That'll be really important. Again, the big news today is right here. The Swiss bank, more financial assistance. But again, we don't know what kind of a position they're in right now, and we don't even know if they're in the doo-doo. We just don't know anything about it right now. So we're going to have to take it one step at a time. Charles Schwab's gained over 3%. Credit Suisse upgraded the stock. They've got so much cash, and the banking actually sector is pretty liquid right now compared to how it was in 2008. The big company coming out with earnings today is Adobe. Now, I want you to see where financials are right now. Now, yes, we could go down just a little bit more, but we're really at the bottom. Let me show you a 10-year chart. This is 10 years. In the last 10 years, we've been at this level once, twice, 3 times, 4 times. This is COVID, I think, right here. Or let's see. I don't even remember anymore. Another time. So 1, 2, 3, 4, 5, 6 times in the last 10 years. I don't have a chart. Actually, it's not 10 years. It's actually 7.5 years, about 7.5 years. But in 7.5 years, we've gone down here once, twice, 3, 4, 5, 6 times. So about once a year. It doesn't happen very often. Now, yes, we could go from 7% to 3%, but we're not up here. You see that? That's very, very important right now. You got to keep that in mind. To me, it seems like a shakeout. Energy stocks. Look at where the energy stocks. Also at the bottom. Yes, we do go down here a lot, but again, in the last 10 years, once, twice, 3, 4, 5 times. So to me, it looks like a shakeout. Look at the real estate sector. Once, 2, 3, 4, 5, and we're there again, 6 times. So to me, the market doesn't look like it wants to go lower. To me, the market looks like it actually wants to go higher based on the momentum levels or stick around here. Now, S&P, only 22% of stocks are trading above the 50-day, but 42 are trading above the 200-day. Let's take a look and see how that looks right now. Looks like it's getting near that bottom level too, and it looks like we've only gone below this level. Look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 8 times. So every 2 years. So I don't know if we're going to go much lower, and I don't think we're going to have a major meltdown right now. I think this is more of a shakeout in the banking sector, and it is what it is, and it's pretty isolated, and it's pretty compacted, and I'm just not seeing this type of market action follow through to the broad market. We'll have to see what happens. In terms of sectors, let me show you sectors right now. Sectors. Let's go to our sectors. Technology is still leading, industrial and communication. It's really weird. I thought these would back away, but they're not, and that's obviously because of the financial sector. But as you can see here, the financial sector is all the way at the bottom. Once you hit the bottom, there's just not much more to go to the downside. We've already lost 12.26% in the sector, in the financial sector, and that includes insurance stocks and bank stocks in the last 30 days. That's a lot, folks. And in the last 3 months, over 10%. That is a lot. And I just don't see it. Also, notice where consumer discretionary is. I find it really hard to believe that consumer discretionary is going to be down here while in technology and communication services are up here. It just doesn't make any sense from a fundamental or a technical perspective. But with that said, consumer staples is starting to heat up a little bit. Healthcare is starting to heat up a little bit. Energy is starting to heat up a little bit. So again, there's other sectors. Utilities is not at the bottom anymore. I told you it would start moving up, and it has. And if we look up here, Let's see where utilities are. Remember, utilities was like at the bottom. Look at that. See, we were right there, and now we're moving higher. So I think utilities have bottomed out. I'm actually looking at some utilities. I'm looking at some consumer staple stocks. I like some of these sectors right now, but I would totally stay away from bank stocks right now. You don't want to be in that. You just don't want. There's too much stuff going on. Now, today's Thursday. No, today's Wednesday. And on Wednesday, I always give you my top long position and my short position. So what do I like right now? I like Hershey's. I love Hershey's right now. I think Hershey's is going to break out. And I'm going to tell you, chocolate and banks, they're just not that correlated. So I do like Hershey's, and I like how Hershey's has run up in the last, I like how it's been holding up, and I really, really like the stock a lot. As a matter of fact, if I can get a little pullback, I'd buy the stock today. To the short side, I think we're going to get a washout in VXX. I think VIX may go up to 60 again, 55. I would be buying puts on VXX right now or shorting VXX. This is the volatility index. I just don't think it's got that much firepower. I mean, we've been going down, finally decides to go up. Typically, these type of parabolic moves just don't tend to last. We're already overbought on the RSI. So maybe a little more. I would put an order at 59, 58 and see if we get filled on a limit order there because volatility may rise in the morning. As I mentioned, the big news today is going to be the PPI. It's coming out in 22 minutes, and hopefully by that time you'll have this video. Let's keep an eye on the market. My suggestion for you guys right now, is to focus on pullbacks in the strongest stocks. Pullbacks in the strongest stocks. First Solar, Win, let's see here, Marathon Petroleum, Lamb Weston, the strongest stocks. Pullbacks in the strongest stocks or pullbacks in 24-week highs. And all of these stocks, Lattice looks really good. Meta looks really good. CDNS looks really good. And Hershey's looks really good. Neo looks really good. Stay away from financials for the time being, and we should be in a good place. Now, folks, don't overreact and don't let this market fool you. Let me show you technicals right here. If you look at the SPY, you will see that we're actually hitting short-term or medium-term, not short-term, medium-term support levels right around just a hair below where we were. And we stuck to this price action for a while between 12.15 and 1.6, about 2 weeks. So if we don't break this, I think we're going to bounce off of these levels and start coming up and again start getting consolidation and choppiness. Everybody's expecting the market to rally hard or the market to drop. I'm expecting the market to stay choppy, just like I predicted the ARK fund would all the way back in May. And look where it is. Yes, I did. January, February, March, April, May. Yeah, right here. Almost a year ago. And people thought I was crazy, and it hasn't gone down. So I'm seeing more consolidation and choppiness for the market. And with small caps not really being sensitive to this volatility all that much, as you could see here, I think more choppiness. Now, before I forget, folks, forget the news about recent bank failures. Forget the Federal Reserve. Something even bigger is set to happen before the scene this week. And it can cause the stocks to soar, other stocks to plummet. That's because Wall Street is obligated to buy certain stocks and sell others. How it works? What can you do to protect yourself? Well, I've got the right guy for you. Jeff Zananeri, you guys know he's very good with global market timing. Right now we have a banking issue in Europe. He's the perfect guy to hear about it. He really is. Jeff is great with this stuff. He's about to reveal just that during a special live session, 1 p.m. Eastern Time. Remember, today's Wednesday. Is today Wednesday? Let's see. What is today? Today is Tuesday or Wednesday? Let's see here. What is today? I think today's Wednesday. Let's see. Am I crazy? Am I losing my mind completely? Yes, it's Wednesday. Yes, Wednesday the 15th at 1 p.m. Eastern Time. I get confused. I thought it was 14th, 15th. The chart says 14th. I'm all over the place. But Jeff is going to reveal just that during a special live event at 1 p.m. Eastern Time, right after my VIP room. I'll remind you guys that as well. You don't want to miss out. Click the link below this video in the YouTube Wealth Press channel or below this video. Like us, subscribe, get in on the Telegram channel where we give seasonality trades, And I'll see you with Jeff at 1 p.m. I'll be there too. I'll be quiet on the download, but I'll be watching it. I'll see you guys soon. Bye. Have a great day. Remember, comment below the video. Bye.